Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. Just a second and we jump into it. Just have to prepare one or two things on the other end real quick. And while I do that, we can already get the usual disclaimer out of the way. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And with that, we pretty much have everything out of the way. Now, last but not least, before we jump into my portfolio and check what's going on there, the reminder for everyone that tunes in for the first time, all the tools that you're seeing in this live stream / video are linked in the description down below. So the broker, the charting software, the strategy I'm following, and so on. And the one thing I really recommend, if you haven't read it so far, is to check out the Elliott Wave Principle, which you can read online for free if you follow the link in the description down below. Now with that, actually forgot to show the welcome message. Is it working? Yeah, there it was. Welcome. And with that, we can jump right into my portfolio. Bum, bum, bum. There we are. So we start off pretty much, I would say break even, slightly red, but it's like a small amount. Where do we start today? I think, as usual, by taking a look at GameStop, since that's our biggest position. So again, while we saw a bounce from here recently, I believe, as I mentioned in the previous streams as well, that we haven't yet seen the end of this correction down, and I would not be surprised if we get a push down to the $15 mark, where we would have the 78.6 retracement level as well as the minimum target, under the assumption that this is wave A, B, and now wave C down, which would mean that here we have something of like 1, 2, 3, 4 in developing. So 4 still developing, could still go a little bit further up, and then wave 5 down to potentially finally finish this corrective pattern before we go further up. Now, as always, I could be wrong. I'm only sharing my opinion, and the correction could already be done here. But considering that we have such a nice overlap between the minimum target area for the assumption that this is wave A, B, C and the 78.6 retracement, I just think it's the most likely scenario that, again, we'll go into this area before we go further up. Now, as for my GameStop position in this account, so we already rolled our calls into next week. Yesterday, we did that to free up a little bit of money to get this NVEX call, so Novavax, because of the pattern that we saw there yesterday. I had an alert here, and that alert actually triggered. We can actually delete it now. Don't need that one either anymore. And based on that, the assumption would be that basically, if that is an impulse wave up, we have our wave A down, wave B up, and our wave C down. That hits the minimum target and goes a little bit through, but pretty much then bounces from here and almost retraces 61.8%. And then from here, we have the assumption that we might be done with our wave C here, and from here now go up. Now, even if we're wrong, we would first go further down into the area here potentially, so 760 to $8 mark. And then from here, we would have our fifth wave. Our call is expiring in January, so even if we are partially wrong, I mean, if we're fully wrong and we go down, then the call will obviously be worthless. If we are partially wrong and we first see another fifth wave push down here before we start to go up till January, there should still be enough time to see that play out and then see the development of a potential fifth wave. Now, that potential fifth wave, we'll actually have to adjust that channel here. Where does that? Yeah, so that was here we have the base channel, so our starting point, 0.1, 0.2. We have the breakout, which confirms or indicates wave 3. We have then, theoretically, if we were to just use Kennedy channeling technique, we already would have our deceleration trend line like this, which obviously doesn't make sense, so we put it like this. We almost touched the top of the base channel, so very often wave 4 will retrace to the top or median of the base channel. Not always will hit it, but at least so we have that. Now, confirmed fifth wave would be once we break out from here. Until then, it's according to Kennedy channeling technique. Until then, it's not fully confirmed. And if this would indeed already be wave 4, we could get our so-called destination channel by taking point 2, our assumed point 4, and a parallel through point 3. We would expect for the 5th wave to hit the median or the top of this channel. And additionally, if we, where do we have it now? That's that. I'm not sure if we have it on the chart. Right now we don't have it on the chart. Okay. Additionally, if we add another expansion, so by taking the starting point of our 3rd wave, which we assume is here, our 3rd wave, and then our wave 4, we get our profit targets for a potential 5th wave, which are then at 29.21 to 61.94. So assuming we are correct with our Elliott wave pattern here, this would be wave 1, wave 2, wave 3, wave 4, and then followed or to be followed by a 5th wave that takes us at least to here. We see here we would touch the median, or to here. It could also go higher, but I mean, those are the most common targets. Very often, to be fair. So in my experience in the past, when we apply an expansion for wave 3, 4 to get an area for wave 5, very often we at least touch the 61.8, but fall a little bit short. If we don't turn around 61.8, but make it through here, we fall a little bit short of the 100% line. But there are also cases where we go beyond that. Now, considering that, we can get rid of a few things here to clean up the chart. So we can remove our acceleration channel. We can, for now, remove our base channel. We can keep our deceleration trend line, and we can add some labeling here. Yeah, auto labeling disagrees. Auto labeling would label it differently. So I said, let's try this again. So I said, in my opinion, this here is wave 1, wave 2, wave 3, wave 4, and wave 5 should then, for example, take us up here, which would indicate that in September we could potentially, if wave 3 and wave 5 are identical, in September we could potentially be at the $60 mark here, which would be a 500% increase. Now, if we bring over 1 second, where we have it here, this window, and then we go to safe trades and active ones and NVAX. So what did we say here? Potentially 11th of September. So if we simulate that trade, so first of all, we need to change the range, and then we need to change the time frame. So September. So as we can see, in this case, if that were to happen, the $80 investment or $93 investment that I had to buy this call option at that point could potentially be worth $4,000, which obviously is not a life-changing amount of money, but considering the risk that's limited to losing the premium that I paid and the payoff, in that best case scenario where we indeed got it right, this is wave 1, 2, 3, 4, and now we get wave 5. And where wave 5 is identical to wave 3, that would be the outcome of this trade. Obviously, if it takes longer, so if we are right, but it takes longer, then we can see that at the end, the best outcome would still be roughly the same. So the main point is that the earlier we are here, so we can see that on 11th of September, the earlier we are, where at the end we would be at the loss at a price range below 20 or 21 roughly. It would already be at a profit here. So yeah, so much about that. So I think NVAX is going to be, yeah, like there is still the potential that, again, this wave down here hasn't finished yet. But considering everything, I'm quite happy with the pattern. I can see that this might be 1, 2, 3, 4, and 5 to finish the C wave down here. If this is indeed a set 1, 2, 3, 4, and then wave 5. And if that's the case, then from here is said we would get 5 waves further up. The question is just how far does it go? And since we have a $20 call, even if we reach the minimum target, it would still be, let's bring the window back, it would still be in profit. So if we again scaled it up, so minimum target would be around 30. So we can see that even there we would have a 10 times payout. So we have a 1-to-10 ratio here on this trade, which definitely is not bad. Now we covered GameStop, we covered index, and we're gonna now quickly look at the stock yield enhancement program data, so the shares that are lent out from my portfolio, and their duplicate. We're gonna compare basically the last 2 days, performance and reports, statements, performance and reports, statements. So just give me a second. So one for yesterday and one for the day before. So that's the day before yesterday, and that's the yesterday. So if we scroll to the stock yield enhancement program, we can see that the day before yesterday we had Green Wave, COS, and SunPower lent out, and yesterday, where is it? Yesterday it was the same. As for the number of shares, they are roughly unchanged, and as for the interest rate, they are also pretty much unchanged. The interest rate in SunPower increased by 10%, and the interest rate in Green Wave by 2%. But other than that, it's like pretty much the same thing. So with all three of them, so Green Wave, COS, and SunPower, all three of them expensive to borrow. Now that doesn't mean that they will explode or so, especially in Green Wave. I mean, in both of them we hold relatively small positions. We can see we have a relatively, unfortunately, steady decline here. And SunPower is similar after bad company news that was announced here. Auto labeling thinks we have the pattern down, that we finish a fifth wave down here. If that were the case, 1, 2, 3, 4, 5 wouldn't be bad, because then we potentially would get a recovery rally, but it remains to be seen. And obviously the interest rate that we earn right now does not compensate for the losses that we incur on those small positions. But so in Green Wave and in SunPower, it's pretty much a small gamble position with potentially high short interest, where any kind of positive news about the company that indicates that the company has a future ahead, or companies in that case, would or could potentially shoot the stock up substantially. Now in COS, it's a different matter. Where we have COS, there we can also maybe improve our labeling. So we are here at the 61.8 retracement. That also is the minimum target for wave C. Auto labeling believes we will go down here, which is possible. So we would have here the 78.6 retracement with the 100% extension for a potential wave A, B, C. If that were the case, then after that we would expect it to go up. Overall, that's still, let's actually circle back for COS a little bit. Let's see how we can label the bigger picture here. So auto labeling thinks we have a big wave 1, 2. So historically, let's see. Historical data, it's always a little bit tricky in terms of being sure that all the spikes and so on actually happened like this. So then we have a pattern that starts from here, where auto labeling thinks we again have wave 1, 2. And this time we bounce at the 78.6 retracement. And then we have a pattern that starts basically in April this year. So if we go on a weekly chart, where auto labeling suggests this is wave 1, but it also would be possible that this is wave 1, 2, or then it would need to be a diagonal. Okay, so let's zoom in a little bit more. Okay, tricky to label this, because this would need to be 5 waves, or otherwise this would need to be so I'm honestly Yeah, I'm having a hard time being sure to label this as a 5-wave impulse, like auto-labeling thinks it's, or actually auto-labeling thinks it's 1, 2, 3, 4. But because we already entered wave 1 territory, it would need to be a diagonal in that case. Not that it's impossible, it just means that then if we consider the bigger picture, that this would only be wave 1 of the third wave that we're looking at right now, because the third wave always subdivides into an impulse and not in a leading diagonal, whereas the first wave within a third wave can subdivide into a leading diagonal. Yeah, so let's zoom in a little bit more, daily chart. So if we only focus on this part here, I'd say it still makes sense to hold on to our position in that case. So, and the point to worry would be if we break through the 535. So if we break through that level visibly, so around like, I don't know, like, I mean, if we have a quick spike, it's okay. But if we actually stay below that level here for a little bit, then I assume that the analysis is wrong, that the pattern that I labeled is wrong, and that we actually have a further downward movement, which would then be the time to cut losses and get out of the position. Other than that, I would say we hold on for now. The auto labeling seems reasonable with the assumption that this is our wave C and the 1, 2, 3, 4, 5. So 5 still in progress, so there should still be a little bit of a push down. However, that doesn't have to be, considering that we're at the 61.8 level. So on one hand, the retracement, and on one hand, the target area for wave C. Therefore, getting out of that position to potentially re-enter better doesn't make sense right now, in my opinion. So that about cost. And then let's move on. Actually, let's move on to the usual suspect. So SPY, it's moving a little bit sideways and up. Originally, I thought that I mentioned in the last couple of streams between 530 and 544, 540 would be the area to buy puts. Now, looking at the development here, I think we actually have a bigger ABC pattern playing out, so that not this was A, B, and C in progress, but actually this is now our wave C in progress. And we can see our target areas for that are 528 to 538. So in that area, probably 536 would be the ideal point, or even 537 would be the ideal point to go short, so to buy puts. If you go short directly, stop loss would need to be up here at 554. If you buy puts, it doesn't really matter that much, but you have to consider the time frame, how long it takes. I think this will play out as A, B, C as set, where we have here 1, 2, 3, 4. 4 maybe not finished, so there could be that we have A, B, C, so push down, and then wave 5 pushing us up potentially into this area here. So 536 would be the point where I'd say, okay, let's buy puts. And go down from here. And overall, the whole thing should be 1, 2, and then this is the next wave, 1, 2, and then we get a strong drop down. That is my assumption for SPY in the immediate future. We'll see how that plays out. Now, if we look at do we get a chart for the micro E mini NASDAQ? Otherwise, we'll just have to circle back and look at the regular NASDAQ again. Okay, we get a chart. Yeah, let's zoom in a little bit. We already covered the bigger movements in the yesterday's stream for sure, so you can check that out. I'm going to try to zoom in and just focus on this downward movement. I also believe that this is 1, 2, potentially 3, 4, and then we'll get a wave 5 down for finishing wave A. And as I mentioned in other streams, I think the target area for that correction is between 14 and 16,000, or 14.5. So actually down here, 14.2 or 3 and 15.9 are, in my opinion, the target areas for the current correction. I know everybody is like, yay, buy the dip and so on. And again, do whatever you feel is right, and don't just base your decision on what I'm sharing here. I'm really just sharing my opinion. But personally, I think it's like going to be like potentially a little bit more of recovery to finish a fourth wave here, and then we get wave 5. Then we get an ABC pattern that recovers again a little bit, and then we get our wave C down. That will then, as I said, take us down into this area. So yeah, I'd be careful with long positions in that case. Yeah. So If the chart loads, we might be able to look at it. If it doesn't, we'll just jump to the NDX, where we are already on a daily chart and where we currently have this here labeled. So, and I think we at least correct this here, but potentially we might be correcting this here. And then we see the target areas are actually here to here. Yeah, here it's a rough time labeling, to be honest. So, but I think this is 1, 2, and then 3, 4, or 1, 2, 3. Oh, let's check extension. It's a little bit harder without the overnight data. We bounce at the 6618 level nicely. So I think this might be 1, 2, 3. And then if we zoom in a little bit, we're going to get rid of that for, yeah, like to keep the chart a little cleaner. We retrace 61.8% here. So I would assume that if the labeling assumption is correct, that we will retrace 38.2 here, which checks out with A, B, C. So if we zoom in a little bit more and add an expansion here for our potential wave A, B, C, then we see we get our profit targets. So to basically either here, so between 18,483 and 18,577, I would actually enter here. I would assume we'll hit the 38.2, or then here. Stop loss in that case would theoretically need to be, if one wants to play it safe, really at the all-time high. However, if one goes with put options, then it's just a matter of expiration date, and if one could have entered cheaper. But yeah, I think this will play out like A, B, C, and we'll finish that C movement in that area. And then depending on that, we can also add another expansion on the chart. So we would then have our potential wave 3 again. And then we get our targets. So if we, for example, turn around here, we can see that our target areas for that fifth wave would be between 16.7 and 15.7. So 1,500 to 2,500 points down. And then from there, we would then get our bigger wave A, B, C to finish wave B. Again, that's just my opinion, but we'll see how it plays out. We actually removed that for now, so because we are not sure, or we don't have wave 4 yet finished in our opinion. If we use Kennedy channeling technique, so then this would be our base channel starting point, 0.2, 0.1. Then we have our breakout from that base channel. So we're working on our so-called acceleration channel. For that, we take 0.1, whatever high point we have, and a parallel through 0.2. So if we look back on the 18th, then we almost have a confirmed wave 4 happening here. So with the breakout to the bottom, one could argue it might be 1, 2, 3, 4, but then this would need to be our finish at wave 5. Then that would be wave 1, wave 2, and then we're actually right now in wave 3. Okay, that might actually make more sense. Oh, but then the whole thing gets even worse in quotes. I mean, that still doesn't change that this here is ABC, but then the assumption would be that on one hand we have here 1, 2. No, there we go lower. Yeah, obviously I'm an idiot. But then if I, just 1 second, if we, so again, we have the high point or the low point in that case, and then we take whichever high point we have and a parallel through 0.2, and then we don't have a breakout here. We touch the channel, but we don't break out. But then we have the breakout from here, which in quotes confirms that we are in wave 4. So we would actually assume that we have 1, 2, and then 3. There we go lower, but it might be a flat corrective pattern. Does it change that if I adjust it? So if we say this is the lowest point and we go again through 0.2, no, we still break out here. Okay, so it doesn't change the pattern. So it would be, according to Kennedy channeling technique, it would then be basically potentially our wave 3 here, wave 4 here, and then wave 5 here. Wave 4. And then if we That's that. If we then take our point 4, our point 2 with a parallel through our point 3, we would get our target areas that we shoot through here. No, I don't think. What if we have the first wave finishes here? Then we retrace here to 38.2 for wave 2. And then we are right now in wave 3 down. Fibonacci extension. And then in the third wave, we are currently having basically our wave 1 finished and are currently performing our wave 2. So we would right now be correcting this movement here, in which case we have a nice overlap here, the 50% area. So yeah, probably would consider getting puts already or then at this level. And stop loss could be here at the high of this candle with at 19,538, or with puts, it doesn't matter that much. And then that would be wave 1, 2 of the third wave. That should then take us further down, yeah. So there are a bunch of different patterns that might be possible here right now. Do we already have more data? No, it's still doing something, okay. So that might be possible here. I think one of them, so either this is 1, 2, and we are currently in wave 3 already, but wave 3 hasn't finished yet. Or even if wave 3 has finished, we are right now correcting this. The other option is this is wave 1. We are currently in wave A, we are currently in wave B, or wave 1 and currently in wave 2, which we would expect to terminate as said in that green area. So either way, the assumption is that this is an A, B, C corrective pattern. And with that, we'd consider going short on that level and that level. 1, 2, 3, 4, 5. Yeah, I think more likely if we also consider the graph down here, that is like the difference between moving averages, that we actually finished 5 waves here, and that we're currently correcting this whole thing here. So get rid of the channels. And then again, same area, because we assume that this is wave A, B, C. So there might be a little bit more upside. Maybe today we have a relatively green day that takes us up further. And then maybe on Monday we have the next beginning. So not like super far down, but you know, the next 1, 2, and then 3, 4, 5 starting to develop downwards. That would be my current assumption. So I'd consider slowly entering with short positions, ideally stop loss up here or with put options. As for the time frame, it's a little bit harder. If that is indeed our wave 1, it happened in July 10th so in a month. So we'd expect that this plays out till September 10th or sooner. So it doesn't have to take as long, but it's possible that basically whatever pattern we have here goes a little bit sideways or so and plays out maybe till September. And then we'd add another month or 2 for the finishing of the potential downward movement, if we're right. So as for the time estimate, I would say in 3 months from now, we could potentially be at 14 to 16,000 in the NASDAQ. Obviously, it's possible that this is already a finished ABC pattern that was the entire correction, and we will be at a new all-time high. But based on the data on the chart, I think it's more likely that it will play out as at something like this. So reach that area, and then from there, build the next wave down. And yeah, like if we have free capital, if I would have the choice between the NASDAQ and the SPY, I think the pattern in the SPY is clearer. It looks at least clearer to me, and we'd be more or happier to enter here compared to the NASDAQ. There is the same option that this is like just an ABC correction and we're on the way to a new all-time high. But I think that that's not the case, and that again, once we finish that potential wave C, which might have already finished here, but I think there is 1, 2, 3, 4, 5 still a push missing, that we then will get another strong push downwards. So as if I'd have to choose, I'd I'm more confident in the labeling in the SPY right now than the NASDAQ. With that, we can take a look at NVIDIA, where we have the option that this is ABC and we're going down from here, but I have the assumption, as said, that this is wave 1, wave 2, wave 3, and depending on how it develops, so wave 3 might not be finished yet, but how it develops, that we actually are then going to see, so if that's wave 3 finished, then we get wave 4 and then wave 5 down. If wave 3 is not finished yet, we first get another push down, we can then adjust the channel, get then our wave 4 and our wave 5 down. But yeah, definitely easier to trade the index in that, or in my opinion, than it is to trade the individual stock. But I think also in NVIDIA that we're on the downwards trend for now. Let's look at NO. There we closed our position yesterday because we went that close to the point where the pattern becomes invalid. We didn't have a big position. It was like $60 or so. So we closed at 25 cents. It's now at 28 cents. So we could have waited and closed a little bit better. There's still the possibility that this turns or is wave 1, wave 2, and we get a strong move up, which according to Olga, or not according, or thanks to Olga sharing the information, might happen if they get FDA approval for one of their drugs. Obviously, if they would get the approval, it would shoot up. But personally, in my experience, whenever we actually break through those two levels relatively far, then it's just a matter of time until we actually then break through this one as well. So I decided to get out of that small position. And with that, we covered NVAX. What's NVAX doing today? So we already took a quick look, but it looks like it's going further up. Yeah. Again, we're not out of the woods yet. There's still a possibility that this is some ABC pattern. We get another push, but from the looks of it, I think it's already the end of wave 4. So we covered NVAX, we covered NO, we covered GameStop, we covered COS, we covered Greenwave, we covered SunPower, Barnes & Noble's Educational. There was also something, there we're still waiting, yeah. So it looks like we might have bottomed here and get the next wave pattern up here, but it could also be that we're actually still in a downward momentum and eventually just make a break for the bottom. So there we'll just hold. And I think that's it. Yeah, I think with that, we've covered everything. So, I mean, of course, there's also Faraday Futures, which is also dumping around on a low ground. So, but again, covered it yesterday in the stream already. So no point to repeat the same stuff over and over again. And then there is Grab that we might actually take a look at. But yeah, didn't change really. So basically, the assumption is we bottomed here, and this is the first wave 1, and now wave 2 in progress, or wave 2 finished here, and then that would be the next wave 1, 2, and then that could be the next wave 1, 2. So yeah, like they will just have to wait to see if that's actually the case, or if from here we break to the bottom. But if I'm right with that analysis, or actually auto labeling, because most of this is actually auto labeling, although auto labeling thinks wave 1 is here, I think it's here. Then we would eventually get a strong move up. And since we have the option here for January 26, so till here, we have quite some time to wait this one out. And yeah, that's it. So since there are no questions in the chat, I'm going to call it a day. Still a few other things on my to-do list. Yeah, it's going to be interesting to see how those things play out. It's a pity that a lot of my capital is actually locked in. So for example, I cannot make the SPY short trades at the moment. But yeah, can't always participate in everything. It's obviously easier to say something than it is to actually then make the trade. But on the other hand, it's also like already another step up. There's one thing, like you think something might go that way. Then the next thing is like you actually tell people that you think it might go that way. And then the next thing is you actually put your money where your mouth is. I would put my money where my mouth is, but my money is actually locked in, as we can see. So available funds are not enough to get some SPY options here, unless I would do it on margin, which I don't want. So yeah, but with that, we're going to call it a day. So thanks for stopping by. Don't forget, like, subscribe, enable notifications so you don't miss out future streams. And I wish you all a pleasant weekend, and I'll see you all most likely on Monday. However, it's possible that there may not be a stream on Monday because I get one of my wisdom teeth removed Monday morning, and I'm not sure how or if I'm going to be in a condition to do a live stream. If I am, I'll go online. If not, then not. So either way, That's why you should, as said, like, subscribe, and enable notifications. And again, that's it for today. Have a great rest of the week and enjoy your weekend. See you all then hopefully next week on Monday.